Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Get my headphones together. See, I think I solved my sound issue with everything since the last time. This Windows 11 been driving me crazy. I think I solved it. So, Zoom, can y'all hear me? Somebody say something in Zoom.
Yep, I can hear you.
Okay, Deborah can hear me.
Bounce from here.
All right. What bounce from where? Who talked about something bouncing? What was that? YouTube. Could y'all hear Zoom? Last time they was like, we can't hear the people that's talking in Zoom. We hear them tonight. Okay. Somebody said they hear them tonight. All right. Can everybody hear the clap? Can everybody hear the claps? Zoom.
Yeah.
You hear the claps?
Mm-hmm.
Who looking at some? I heard somebody say something about some candles. Who look? That's Deborah looking at something. Deborah.
That's Sherwin looking at some candles.
Hey, tell Sherwin don't be moonlighting. Tell Sherwin don't be cheating on the gang. Hey, Sherwin trying to get some game from somebody else, y'all. What's going on? Going crazy with them hands over there. I see you now. Hey there. Hey there. With the spamming hands over there. All right. They hear the what's the name? All right, so I think the sound is on. I think I got the sound figured out now. Windows 11 had me in the headlock. But I done figured it out. I think I figured it out. Now that's out of the way. Good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty. Thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Araña Grande. That just means big spot if you don't hablo español. And we are. Oh, this is a weekend chart prep. I don't have a fancy animation for that. I don't have a fancy animation for the weekend chart prep. Since I don't have a fancy animation for the weekend chart prep, I'll let everybody know that. Let me find it. Okay. Now that I found it. All right. Okay. Gonna let everybody know. Go to my desktop there. Y'all pay attention to the desktop. All right. This episode, wait a minute. I got to find my, right? Man. This episode of, y'all like my new thumbnail for the weekend chart prep. This episode of the weekend chart prep is being brought to you by the magical Fibonacci tool. Trading secrets that feel illegal to know. That boy been going AI crazy these days. Yeah, me. Hey man, I'm gonna be doing the magical Fibonacci tool. I officially decided I'm gonna do it. I've been thinking about it. I've been not wanting to do it, but I'm gonna do the magical Fibonacci tool, or as I like to call it, the magical Fibonacci tool. I'm gonna do it. Now, the thing I've been trying to decide is if I want to just record it, right, and make it just like I did with a Smart Money Manuscript, just have it all pre-recorded and post it, let y'all go get it, and you know what I'm saying, go through it like that. Or do I want to do it like a live version of it where we meet like once a week for however many weeks to get through all of the lessons, and then you have like the recorders to go back in order to, you know, present the lesson, take any questions afterwards, and then you got the recordings to go back through and look at later, but do it like live so you can have like the one-on-one interaction, live one-on-one interaction, right? So I'm deciding on how I want to do it. I might put it out there for the people to vote on it and see which way I go. Now, without further ado, let's go ahead and get into this episode of the NQ Futures Weekend Chart Prep / Q&A live stream. How about both? Recorded and once a week live. Not in your live. Not in your live. Either or. Everybody want their cake and to eat it too. Oh man, I ain't even opened up my trading view. What's going on, man? Who in here? Sorry, y'all. I ain't say what's up to y'all. I know we got Deborah in here. I heard Deborah. We got Stevie in here. We got Lump in here. We got Rhonda Green up in here. We got Kim up in here. What's going on, Kim? We got Here to Learn and Share. We got CZ up in here. We got, hey, that's all. I see more numbers than I see names, so that's all I'm going to shout out. Everybody else, I appreciate you for pulling up. Even if you lurking in the background, even if you a hater that's lurking, even if you one of the faithful gang that like to sit in the back and not talk, welcome. All right, man. I ain't going to hold y'all up forever. We're going to go ahead and get into, what is that? I don't know. How does my mic sound? Do my mic sound good? I had adjusted my mics and everything. It sound good to me. When I unmute it, sound good to me. So hopefully it sound good to y'all. All right. Without further ado, y'all, let's get into it. We gonna this weekend chart prep. So we gonna jump up to, let's look at the monthly because we're coming up to the end of a month. Right, we're coming up to the end of a month, and since we are going up to the monthly, let's hop over real quick. As y'all see here, I don't know if y'all can see this here, but this is a prior month's low, and you see it's like kind of floating in the middle of nowhere. Like, Tim, what's going on with that prior month's low, right? If you look here, it's from the continuous contract, right? And then you're looking at this fair value gap right here, this bullish fair value gap there that's kind of floating in the middle of nowhere, right? It's from the continuous contract, right? And you say, Tim, why you ain't just marking out that fair value gap there? Why you just marking out that fair value gap there? I'm paying attention to it. It's not off my radar, but per Michael and per what was brought to my attention about what Michael does, right, on his continuous contract, he has the B adjust turned off. So he's not adjusting for what I like to call inflation, right? He's looking at the PD arrays for the price levels that they were created during that time. So when your B adjust is off, that gives you those price levels that it was back during that time, back when before this June contract changed over, right? We switched from the June to the September June 2025 to September 2025 here, right? So prior to that switch, right, and prior to any of the switches, all the PD arrays and all the lows that you see here, see, that's that monthly low right there from September. Because if you turn the B adjust on, see that monthly low is up there, and see how it looks like the front month now, the fair value gaps, like this fair value gap is kind of floating in between fair value gaps because of inflation adjustments, right? The PD arrays are higher, the liquidity is higher, everything is higher, and Michael keeps that off, and so that he can see the liquidity pools in the PD arrays at the levels they were created back at that time. Okay, so looking over here at our continuous contract here, if we look at our entire dealing range that we're in right now, right, we're getting ready to come up on the end of a month. We still have 2 days left in this month. By the way, this is a short week. I think Friday, if I'm not mistaken, I think the market is closed Friday, right? It's a bank holiday for the U.S., so the market is closed Friday. We'll look at the CME group to see the exact time the market's gonna be open and closed, but I think it's closed on Friday. All right. If we look at our entire range, right, let's get us a consequent encroachment mean threshold. Right, we look at our entire range here, right, we're still up here in the premium of our overall range, right? If we look at the latest expansion of our range after leaving this balanced price range down here, right? If you can't, for those who can't see the balanced price range, this is our balanced price range right here, where price was engineering liquidity there, and then we got this offset accumulation right there, right? Why is it offset accumulation, Tim? Because price was consolidating. We attacked sell side, then we reversed and attacked buy side, giving us a bullish Judas swing, giving us the example of offset accumulation. What is offset accumulation? When you attack sell side and rally to the buy side and expand away. So we got consolidation, expansion, reversal. Now we're getting the retracement, and we will be looking for the delivery in the future, right? C, E, Yeah. C-E-R, consolidation, expansion, reversal, retracement, right? And then delivery, right? C-E-R-R-D, right? I was struggling with writing that out. But once you get a balanced price range here, you don't want to see price digging back down into here, right? The most you want to see it come to is right into that order block right there for nice healthy price action, right? Want to see it. That's why we have this monthly PD array marked out down here. That'd be a nice place for price to draw into, right? Our discount PD array, leaving that breakaway gap intact because it's inside that balanced price range, right? Give us a nice little poppity pop, 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 pop. Who remember what Michael's summer goal was? Let me see. Did I have it on my chart? Did I put that on my chart? Michael had a summer goal. Let's see. Long term, that's it right there. Hey, that's my that's my prior month's low from continuous chart. So I guess that's because I got long term sell side target, and I think that's the same thing. I named it that when I marked it because Michael was saying that was his target for the summer. I think that's it. I don't know. Somebody go back and look at the video and check me on that. Somebody go back, look at the video and check me on that. So looking at our monthly time frame here, we can see that we have traded below last month's low there. Last month's high is up there. We are in the discount, right? We're in a discount of our latest expansion of our dealing range, right? Whenever we're trading price, we all know that we look for trading opportunities inside of the latest expansion leg. You know what I'm saying? And that's everything with ICT concepts. It's all predicated on you're looking at low resistance conditions, low resistance liquidity run positions. But I mean conditions. That's why when you're looking at your entire dealing range, right? Since we got this balanced price range, we want price to come back to a discount of that latest expansion leg and continue up to give us that continued low resistance move, right? We don't want it coming all the way back down into the discount of the overall range, coming all the way back down into the order block, right? Giving us that high resistance move, meaning deep retracements, right? Meaning deep retracements. And since never mind, I ain't gonna get into all of that. Right? I might as well since I'm here, right? So this right here is an area of accumulation, right? This is an area of accumulation. We've displaced away from that area of accumulation, right? If you have an area of accumulation and you displace away, or area distribution, it don't matter, right? And you displace away, if we anchor our Fibonacci tool from the lowest body to the highest body, what can we use that tool to look for? Based off the fact that we've displaced away from an area of accumulation, and we anchor it to the lowest body to the highest body, leaving that area of accumulation, what are we getting ready to check for? Somebody tell me. Who remembers? Stacks on stacks. Stacks on stacks. What are we checking for? What are we checking for?
Checking for manipulation after that.
It's based on the fact that we've expanded away from an area of accumulation, right? And then so we anchor it from the lowest body to the highest body. And then we're going to go in there and turn on one of our presets. What are we looking for? The clues are you're leaving the area of accumulation and you're anchoring it to the lowest body and the
What's
highest
going to look for
body.
equilibrium of 50%? You want to look for the 50% of the range?
Nope. Nope. Because you can look for 50% of any range. But I'm giving you the clues. Area of accumulation. Expand, displace away from it. And as you start to retrace, you're anchoring it at the lowest body and the highest body. So what template are we going to choose? Come on. Who knows? Y'all make
OT.
OTE. There you go. I already know you just sat there and you read. Shut up, clapping. I know you just sat up there and read through the things. It was like, okay, I'm just gonna pick OTE because I see OTE inside there.
I was contemplating answering because I said, "Oh my God, I don't want to sound crazy."
Yeah. And let me anchor this right. There you go. So, OTE. That's what we're looking at. OTE, right? Remember, you got rules for everything, right? Remember, OTE was never designed to rely on any PD arrays, right? The only thing that OTE relied on was the fact that we were in a market maker buy or a market maker sell model, and we were leaving an area of accumulation or distribution, right? Because we had already got our smart money reversal, we had got our low risk buy or low risk sell, and then we had went into an area of accumulation or distribution, and then we expanded away from that area of accumulation or distribution, and then that was the point you were looking for your OTE entry. If y'all remember, I told when I first got introduced to ICT, the original silver bullet that he was talking about was an OTE entry based off of that last stage of accumulation or distribution, because that was the most powerful move going into that liquidity. Once you're getting ready to complete that market maker buy model, you get that OTE entry on that last stage. If you're in a market maker buy model, when you get to that last stage of accumulation and you get that displacement off of that accumulation, you got that OTE entry, and it was the strongest move into the liquidity. That was the original silver bullet that I was introduced to. Okay, so the criteria for the OTE, leaving that area of accumulation or distribution, running the field from body to body, and then you map out your OTE. And then you see here, based off of OTE, you see how far price can go, right? The 62 is at the low of that monthly BISI, right? The midpoint, that optimal point, is way down here, right? Inside the wick of the order block, right? Inside the bullish breaker, right? And then the deep retracement is all the way down here in that lower fair value gap. So if we got that really deep retracement, right? That's why I be saying you want to know your invalidation points, because just based off of OTE alone, look how far price can retrace and still not invalidate the buy program, right? That's why you always want to know, what are my invalidation points? When am I wrong, right? Just because you take liquidity don't mean that price is reversing, right? You always want to know, what is my invalidation points? All right. Just threw that in there as a free little tidbit for anybody who didn't know about OTE and stuff like that.
That's a GM moment.
You say that's a gem moment?
Yeah.
That's
Yep.
that's old news. Hey, let's get over here to the front month so we can see our. Now we see where we got those PD arrays from. Even though it looked crazy on the front month, now we know where they come from and we understand why we got them there. All right. This right here is the prior month low that I have marked out. As you see, we attacked that monthly low. Right, we attacked that month. That's the daily low. We attacked that monthly low right here from February. We attacked that a long time. God dog it. We attacked that a long time ago. Right, I just got it turned off on my chart. We got our monthly PD arrays that we're watching. Right down here, that's the sell side liquidity based off of a prior. It's not a swing low, it's just a prior month's low on the monthly time frame. I think on the lower time frame it may be a swing low. Let's go back to the continuous chart and check that really quickly. God dog it, Tim. All right, let's drop down to a weekly. Yes, it's a swing low on the weekly time frame. Right, so on the weekly time frame, it's a swing low right there. So on the weekly time frame, it's a swing low, a weekly liquidity pool. On the continuous contract, the September low is slightly lower than the August low, right? So I'm just looking at that as a liquidity pool, right? Why am I not looking at it as relative equal lows, even though they're relative equal lows? Because I only call them relatively equal lows when the left swing low or the left low is higher. That helps me keep the focus of what Michael taught, that when the left low or the left high is higher or lower respectively, they left liquidity there. They engineered liquidity, so it make it a high probability relative equal low. Because if the September low was higher, that mean at one point in time they came here and left liquidity there, so they're engineering liquidity. So when it's coming back, it make it a higher probability that, okay, they may raid it because they have engineered liquidity. Now when it's a swing low, it's still engineered liquidity, but it lets me know, okay, they have already taken liquidity at one point in time at this spot, right? That's why I only call it a relative equal low if the left low is higher, and a relative equal high if the right low is higher, and a relative equal high if the right high is lower. Y'all know what I'm saying. I'm getting tongue tied, but I know what I'm saying, right? Hopefully I ain't confuse y'all. Okay, so let's jump back over to the front month. Okay, and so we closed very low on the week. We finally starting to expand outside of that range, right? We finally start to really expand outside of that range, but on the weekly time frame, right, we're overlapping these candles, right? We're not creating these fair value gaps. We are creating suspension blocks, right? But we're overlapping these candles, right? So we got one, two, we got 1, 2, 3 suspension blocks that we created coming down so far, but we're not creating any fair value gaps because we're overlapping the candles, right? The candles are overlapping. All right, now we traded very near this monthly low, right? And on the front month, right, remember I said I'm not ignoring these PD arrays, right? I'm not ignoring these PD arrays. I'm just looking at the ones from the continuous contract because this is liquidity that was created during this time. So I'm focusing on this, right, as like a priority if you will, over where we're trading here on the front month. Now, let's go over to the continuous contract and see where this June weekly fair value gap is. All right, so if we come here to June, let's find June right there on the weekly. So it's inside of that it's inside that monthly. All right, so how do you transpose them over? We're going to see it now. We talked about this before, but this is a chance to see it now. All right, so we create our weekly fair value gap. All right, and then we come here. Right, so we look at our all our information here. Right, we got our high, our low, our coordinates, and all that. So I'll just do it like this. I'll just come to the front month on this tab over here, so I ain't got to keep I don't have to keep jumping around. So we come here, right, and I grab this. Let me grab this, copy that, come over here, paste it, see it popped in there, way up there looking crazy, right? So I come back up here and I get my coordinates, right? 22,751.50 for the high, 22,751.50 for the high, right? 22,222 even for the low. 22,222 even for the low. Boop. There you go. And then 285 and 258 and 285, 258, 285. Right. But the coordinates ain't work, so we ain't gonna worry about the coordinates. We're just gonna put it inside there. But the levels work. The coordinates ain't the same, but the levels work. I can just come in there, and adjust it to whatever you want to put it on. No, that's a weekly. Right. Get back. Right there. So there you go. So I just pull that over there. So there's that weekly. That's that June. This June BISI right here. It's down there on the continuous contract. All right. So I'm not ignoring this BISI here for June. Right. I'm not ignoring that BISI there for June. Okay. I understand that it's there on the front month. But since we're trading down, since we're trading down here near PD arrays that were created before this front month came to be, right? I'm looking at them in the time and the price, in the price levels that they were created in, right? Because that's how Michael does it. And everything that he showed as far as the PD arrays they're targeting based off the price levels that they were created in has been hitting to the T. So that's why I'm studying them and watching them for the time that they were, for the price levels that they were created in, because we're now back down in those prices. And this is just me talking. The algorithm cares nothing about us adjusting the price for inflation. All right. It ain't really inflation. That's just what I call it. Okie doke. Okie doke. Now, let's jump back over here and continue on. That's our weekly. That's our weekly low, our weekly high from last week. That's about all I want to. I got a higher time frame low there that I'm watching, right? I have a higher time frame PDA rate down here that I'm watching from the continuous contract. So that's all I'm going to mark out for the weekly time frame. What I can't remember what this was from. I'll look at that later. Okay, so on our daily time frame here, right? On our daily time frame here, we have our weekly low and daily low are at the same level, right? We have gotten below this this bearish fair value gap from August 19th, 2025. Again, this is from the continuous contract. And Q. Right. This is from, that's a weekly. Right. That's this fair value gap right here. That's this SIBI right here from the continuous contract. Okay, looking at that, because that right there is the first SIBI that we created as we displaced down here. All right, and we came back, traded up, and then we was coming back down to it. Right, did not use it as an inversion fair value gap, and as we see here, once we got here to this balanced price range, right, once we got here to this balanced price range, I'm just gonna go body to body on this balanced price range there. Right, and look at this here. Right. Once we got back to this balanced price range right here, price just kind of pushed through. Right, so we just pushed through this area right here. Didn't use it for any type of support. Just pushed right through it. All right, so when you're above a balanced price range and price is bearish, you want to see it cut through it. When you're above a balanced price range and price is bullish, you want to see it use it as support. Right, we did not use it as support. We melted all the way through this balanced price range, almost made it like out the bottom of it. Right, if we look at the bulk of it, we actually did go through the bulk of it, because this is where the bulk of the trading took place here, right? Because we dropped down there, rallied back up. We have a balanced price range there in these two daily candles from the first and the fourth, right? And then we traded up, came back down to, you got the fifth, the sixth, we traded up, came back down, right? That's another little balanced price range overlapping, right? But inside this range here, that's the bulk of the accumulation right there, right? And so we traded all the way down today. We just traded all the way down to the low of that area right there, right? So we're cutting through this whole area there, right? Just like butter, just cutting straight through it. All right, that's showing heaviness. That's a sign of heaviness, because we're cutting through this area here, right? If you want price to draw into, right, these lows down, see these lows down here, right? We got these lows down here. We got a swing low there. Let's go see what this is on the continue. This is the continuous chart right there. So we got swing lows down here. All right, make sure everything, yeah. All right, so we got a swing low there from August 1st there. That's down there inside that monthly. All right. So we go there. So 22,755 even, right? That's some liquidity there. That's resting inside of that monthly bullish fair value gap, right? and it's right there near that weekly bullish fair value gap. So with this heaviness right here, right, what can price do if it wanted to stay heavy for a while, right? Maybe kiss that low, right, retrace back up into that SIBI, and then come back down into that PD array, right, and then come up and break that high, and then use that as an inversion, and continue back up. All right, that right there would be nice, healthy price action right there. Why? Because we're trading down in a discount, we're sweeping liquidity, we're coming into a monthly imbalance, right? Trading down into the monthly imbalance and then using it as a discount PD array to spring us back up. Right? Nice, healthy price action. Okay. All right. So enough of the what ifs. Now let's go back to the chart. And daily high, low, traded below the inversion fair value gap. So now we want to see if it be used as a reclaimed fair value gap. Right now, we're leaving this area here, so that puts this reclaim in the premium of that range there, right? So if we look at our range from Friday, that's the high, that's the low, right? We have the inversion fair, the reclaimed fair value gap resting right there at equilibrium, right? We come down to the low that we've made today, right? And now the bulk of it is resting in the premium of this range, right? So now we got this is now in the premium of the move, right? So let's just say like price did get down below that low, right? If we kiss that low, start to rally back up, right? Now we have that whole reclaim in the premium, right? So now you see how you kind of projecting what healthy price action would be for this sale program that we're in a move down to the higher time frame. Remember we said last week or week before last, the monthly has a reason to come down here. When we was inside all of this foolishness, when we're slowly trickling down, the monthly has a reason to go down there, but we keep respecting this bullish order flow. It ain't giving us nothing. Now it's starting to give us something. It's showing it wants to move. Now, is it going to give us an opportunity to participate? Right? It's showing, okay, I want to move. Now, is it going to give us the opportunity to participate? Meaning, right, we consolidate and we expand and give us the retracement to deliver. All right. Nothing else I want to mark on the daily. Right? Nothing else I want to mark on the daily. We created a SIBI up here on Friday. Right? We created a SIBI up here on Friday. That's inside of this range here. Don't want to see price digging back up into that. Right? Want to see that order block stand strong. Right? Especially if we just kiss this low, or if we don't even touch that low yet. If we just kiss it or don't touch it, we want to see that order block stand strong and keep price down, because remember, we're cutting through a balanced price range over here, so we don't want price to be rallying too far back up. All right, don't want to see it rallying too far back up. 60-minute time frame, this is about as low as I'm gonna go. Right, we're in a deep discount. Right, we're in a sale program, deep discount in the sale program, deep discount on our latest expansion of our dealing range. Right, Friday's price, this is our latest expansion of our higher time frame dealing range, right? For our intraday dealing range, this is our latest expansion of our intraday dealing range right there. From that swing high there, created at 11 a.m. on Friday, down to that swing low right there, created tonight, right? This is the latest expansion of our intraday time frame. So everything is in a sale program right now. Everything is in a discount, right? All the way from as we seen, right? Come short term, right? Sale pro, everything, right? From weekly, right? Sale program, we're coming down. Daily, right? Sale program, down here in a discount, right? Intraday, sale program, right? From the week to the day, right? To the intraday, everything, sale program, and we're in a deep discount, right? We've even traded, we've even extended, right, our daily range, right? Starting out at 6 before price opened at 6, that was our range. Opened up at 6, gap down below the low, right? Now we've traded down, right? Came back up to the daily low, and we're just sitting here engineering liquidity right now, right? Just sitting there engineering liquidity. So we're in a deep discount overall. Deep discount, right? Personally, even though price is heavy, even though price is bearish, right, I would need some type of retracement before even looking to participate in anything short, right? Because we're in such a deep discount, right? If you're looking at from like a daily time frame or higher, right, you want to see price coming back to a premium of our, right, current dealing range based off the day, right? That's equilibrium there, coming back up into this reclaimed fair value gap, right? On an intraday basis, right? This is the latest expansion off the intraday basis. That's equilibrium based off your intraday basis, right? On the hourly time frame here. Highest high made at 11 on Friday. Look. Oh, hold on. Alright. Yeah, so I'm back. So yeah, that's the latest expansion on our intraday time frame, right? Equilibrium is up here. All this down here, we're down here in this deep discount. We've traded below the sell side liquidity from that range, right? And extended that range down. Oh, let me put on my new week opening gap. I didn't put that on. So we opened up here. Open there. What's tomorrow? The 30th? All right. That's our new week opening gap there. Okay. And as we see there, this is, right, when we said this is our, this right here was our latest expansion right there based off the hourly time frame there. All right. This was our latest expansion based off the hourly time frame there. And then looking at the 1 minute time frame, right, we can see that we've created some buy side liquidity there, engineered some buy side liquidity there, right? We have some, what'd you say, like we got buy side liquidity there, internal liquidity there. We have internal liquidity here, right? And then we got some liquidity there that's in the premium of that move, right? And then we have the low of that reclaimed fair value gap there. We got the low of that reclaimed fair value gap there. Looking to see if there's any important PD arrays there. We have a inversion fair value gap on the 1 minute there from 1:06 p.m. That's resting inside there. We have a SIB here from 117 that's just below that. All right. We also got an inversion fair value gap here that's right at the low of that. So, all right, yeah, got an inversion fair value gap there. That's from 1241. And then this right here is from 106. That right there is from 117. Hit the wrong one. I said I wasn't even gonna come this low, but oh well, we here now. So this is the lowest inversion fair value gap as we're coming up. All right, that's the lowest one there. This over here. So as price is coming up, right, you'll hit this SIBI first, right, and then you'll come into that inversion fair value gap, and then you will move into that inversion fair value gap there, right, and that's going all the way back up into that area there. But just looking at price here, right, we have buy side liquidity that's just into the premium, right, for a low resistance type run based off where price is now, right? Buy side, you have minor buy side here, and then you got buy side that's in the premium. Then you also got buy side there that's in the premium, right? So this right here will be a very low resistance run, just coming back to a premium slightly, and then that right there is your buy side liquidity that can be taken before getting back to the higher time frame PD array. Right, looking at a 15-minute chart, or the bellwether chart as Michael likes to call it, right? This right here on the 15-minute time frame, this here is our latest expansion right there from that high there. Okay, so we've come up, poked into a slight premium, right, based off of the latest expansion of the 15-minute time frame, right? Nice little rejection. Then right here we've been respecting the upper half of the new week opening gap, right? Looking to see if this continues to push us down after coming to this premium. But if price can push back up above the new week opening gap and then start using it as support, what does that look like? Just see how we're using it as resistance here, respecting consequent encroachment. If you get back above it, right, you will want to start using it as support, respecting consequent encroachment, right, to move up. And then if we start to move up, see that liquidity there that we was talking about was the liquidity in the buy side, I mean the premium for the was the 60-minute time frame. I think it was the 60-minute time frame from that high down, right? That was that liquidity that was in the premium of that range. Let's see if I go. Yes, right. That was that liquidity that was in the premium of that range based off the higher time frame. Right. So, and then the 15-minute has a SIBI that's there at 1:15 p.m. That's up there in that area also. Here, volume imbalance there. Look like a volume imbalance there. There's a volume imbalance at the bottom. Is there a volume imbalance there? This candle closed at 66.25. This candle opened at 66.50. No volume imbalance there. All right. So boom. 15-minute has a SIBI right there. Right up there in the premium of that 60-minute time frame. Right. Some 1-minute information up there also. And then based off the 15-minute, right there, respecting consequent encroachment of that right there. Y'all see the levels, man. Y'all see what it is. Right. Y'all see the different levels. Gang, tomorrow, my son got a visitation at a school, so I will not be doing a pre-market analysis in the morning. Christopher got a visitation with a school. We leaving out in the morning. Not super early, but it's gonna be before we do our pre-market analysis. So that's kind of why I went a little bit further, so that we can see what the intraday chart looking like right now. So when you wake up in the morning, right, and you get your pre-market high and your pre-market low, right, remember what we said about for your intraday time frames, right, where your equilibrium is for each time frame, right, based off the 15-minute, based off the 60-minute, right. This is your premium and discount based off those intraday time frames. See where the algorithm is still playing around when after the Asian and London sessions. All right. Anybody got anything for me before we get out of here? You're welcome. You're welcome. Anybody over there in YouTube land got anything for me? Especially anybody that's watching that's not part of the gang. Is it anybody here that's not part of the gang that's watching? What's up, C-Walk? Anybody in the YouTube that's not part of the gang? If you're not part of the gang, put a 1 in the chat. If you're in YouTube, put a 1 in the chat. If you're not part of the gang. What's up, Quoke? Is that Quoke? Quoke ZMS? What's up, Miss? Oh, y'all give it up for Miss Zen Supernova. Miss Zen Supernova said that tonight is her first time tuning in. Lorraine, if you don't get out of here putting a 1 in the chat, talk about she ain't part of the gang. Lorraine almost shook that church hat off your head. Talk about you ain't part of the gang. Almost grabbed on the fifth Sunday fellowship. You talk about you ain't part of the gang. I almost grabbed you and shook that church hat off your head. Hey, welcome, Miss Zen Supernova. Talk some, well, technically, Tim, I'm not. You better stop that. Lorraine, you been gang from way back. You're welcome. Hey, Zen Supernova, do you trade ICT concepts or you just tapping in? Cause The algorithm pushed me in your direction. Speaking of algorithm, y'all hit like for the algorithm and share with somebody you think might get something out of this, man. We trying to reach the whole world. Y'all see Miss Zen Zen Supernova just showed up, man. That's cause y'all been hitting a like for the algorithm. You know what I'm saying? Algo, but I'm always looking for new NQ analysis. Okay, yeah. Yeah, all I trade is NQ. We pull up, we do chart preps, we do price action recaps, right? Price action recaps, we usually try to do that every night at 6. Weekend chart prep, you know what I'm saying? I try to pop up on Sundays and do it. I don't do it all the time. And then me and the gang, we do pre-market analysis on Monday, Wednesday, and Friday morning, and we do tape reading on Wednesday mornings in the gang. I said that I was going to start doing a pre-market analysis, a public pre-market analysis once a week. Since I'm lazy and don't want to do an extra one, I might just end up doing it with one of the ones that I do with the gang. But then again, I might just do an extra one like on a Tuesday. Then, you know, the gang get a chance to, you know, get a pre-market analysis Monday, Tuesday, Wednesday, and Friday. And then the public could get a chance to join us like on a Tuesday. You know what I'm saying? To get a pre-market analysis in the public. But yeah, tap in, Miss Zen Zen Supernova. Tap in. You know what I'm saying? We love the company. I'm glad to see you. Hey man, I don't see nothing in the chat. Gang ain't saying nothing. Somebody talk some extra. Gang ain't saying nothing. I don't see nothing in the chat, so we gonna go ahead and call it, man. I'm tired. Anyway, gotta get up early in the morning. Hey man, for those who don't know, right, it's official. I have officially decided to do the magical Fibonacci tool. Trading secrets that feel illegal to know. I have decided to do it. It's gonna be dropping whenever I feel like dropping it. Y'all know me. I'll be taking my time. When you be retired, y'all know how hard it be for me to get to this desk and work. Man, when I get to this desk, I do a half a slide deck and I be like, I'm telling you, man, it be so hard for me to work, man. It be so hard for me to work. But we gonna do it. The magical Fibonacci tool. It's coming. And for those who don't know, I just how I say Fibonacci. I just like to say Fibonacci. Right? The magical Fibonacci tool. Hey man, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Oh, wait a minute. Hey, Miss Zen Zen. Right? Since this your first time being here, since you know what I'm saying, you on here, I know you can read. Go to RhondaGreen.com. One of the gang members named Rhonda Green. This how she look right here. That's Rhonda Green right there. One of the gang members named Rhonda Green. She be writing books, man. Go check out Rhonda Green books. RhondaGreen.com. She got a few books on there. This is one of the ones right here that I bought. She got a digital book on there, and she got another book on there about some dirt or something. Dirt, well, how much your dirt worth, I think it's called. Who remember what the name of Rhonda book is? I'm horrible at talking about it.
How much is your dirt worth?
Oh, there she go right there. Rhonda in here.
I'm still here.
How much is your dirt worth? Tell Supernova about your book. What is it? Let me see. Supernova said, what's the site? Oh yeah, I see her website. Supernova already went there. RhondaGreen.com. See there? That's AI Rhonda Green right there. That ain't real. That's real Rhonda Green down here. That's AI Rhonda Green. Right? Wait a minute. Is that another book? That's a new book right there? AI Rhonda Green?
It's been there. That's been there.
Oh, that's just my first time reading the title. That's just my first time reading the title, I guess. All right, so yeah. That's it there. That's the website there. And before book. Oh yeah, Before the Butterflies. Yeah. That's the one right there. That's the one I had downloaded. I ain't read that one. I read this one right here though. I read like 3 pages. In this one right here. So that qualified as a read for me. Yeah, go check it out. Before the Butterflies. Before the Butterflies and all that right there. Anyway, that's all I got, man. Yeah, 3 pages. What you talking about? That's a lot for me. I will. Thank you for the record. You're welcome. All right, man. Until the next time I decide to go on Algo's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Araña Grande. That should be Big Spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.